All right, you may have expected it, but the Bank of Canada has just dropped rates once again. They have been on a tear. This is the fifth consecutive rate drop here. What did you predict it was going to be? Because we actually ended up getting a 50 basis point reduction. That brings down the policy rate to 3.25%. They were not super excited with the job data that came out recently, so they had to come down with a big hammer here and drop another 50 basis points. I'm going to read an article here straight from the Bank of Canada website, give you guys a little bit of a breakdown on what their analysis is, what they're saying here, and then what I'm going to do after that is I'm going to talk about what I think the impact is for the GTA real estate market. If you're a first-time home buyer, move-up buyer, we're going to break it down for you there. If you want to talk real estate besides these reductions here in the interest rates, text me at the number here on the screen. If you don't want to text me, but you want to have a one-on-one discovery call, click that first link in the description box down below. We'll chat on a discovery call, figure out what it is I can help you with in the GTA real estate market, whether that's buying, selling. I'm here to help whatever is necessary. So the article, the Bank of Canada today, they did reduce that target overnight lending rate to 3.25%, with the Bank of Canada rate at 3.25% and the deposit rate at 3.25% as well. The bank is continuing its policy of balance sheet normalization. The global economy is evolving largely as expected in the bank's October monetary policy report. In the United States, the economy continues to show broad-based strength with robust consumption and a solid labor market. U.S. inflation has been holding steady with some price pressures persisting. In the euro area, recent indicators point to weaker growth. In China, recent policy actions combined with strong exports are supporting the growth. But household spending remains subdued. Global financial conditions have eased, and the Canadian dollar has depreciated in the face of broad-based strength in the US dollar. If you haven't been paying attention, Canadian dollar has just been tanking. Hopefully you don't have to spend USD for anything, because right now it is painful to see what that conversion looks like for us Canadians on that dollar. So in Canada, the economy grew by 1% in the third quarter, somewhat below the bank's October projection, and the fourth quarter also looks weaker than projected. Our economy is not growing at the same rate that they were hoping, that's for sure. Third quarter GDP growth was pulled down by the business investment, inventories, and exports. In contrast, the consumer spending and housing activity both picked up, which is great. We've talked about it in previous videos here, suggesting that lower interest rates are beginning to maybe boost the household spending. Historical revisions in the national accounts have increased at a level of GDP over the past 3 years, largely reflecting higher investment consumption. The unemployment rate rose to 6.8% in November, as the employment continued to grow more slowly than the labor force. Wage growth showed some signs of easing, but remains elevated relative to productivity. A number of the policy measures have been announced that will affect the outlook for near-term growth and inflation in Canada. Reductions in targeted immigration levels suggest that GDP growth next year will be below the bank forecast. The effects on inflation will likely be more muted, given that the lower immigration dampens both the demand and the supply. Other federal and provincial policies, including a temporary suspension of GST on some consumer products, one-time payments to individuals, and changes to mortgage rules, will affect the dynamics of demand and inflation. These one-time payments are really going to hurt us, I think. If you've been paying attention, you're going to get a check if their household income was, I believe, less than $150,000 for $200 check per person. This is just more money I think the Liberal government is throwing at the wall, trying to get more votes for next fall. But I think it's really just going to add more pain ultimately to the end of the run for the Liberal Party here. And it's going to put whoever's the next power for Canada dealing with a bigger deficit. So we're not going to go over the middle of the article here, but essentially because of all of this, they have decided to go with that 50 basis point reduction. Now, with all of that being said, I'll put the article linked in the description box down below if you want to read the rest of it. I don't want to bore you with it further. What it means for the rates here is the fixed rates, you're going to start to see them in that lower 4.25, 4.5 range, and variable rates are now at 4.80. Of course, that is going to depend on what the discount you have with your lender is, but we're finally seeing both the variable and the fixed getting closer in rate, which is what we're looking for. We're looking for that variable to be a potential option for some of the people who are buying or refinancing their mortgage, because right now the fixed rate is what everybody's choosing. There was so much of a gap between the fixed and the variable so that it didn't really make sense for people to go variable, knowing that there was still a 1.5 or 2 point gap or a 3 point gap, whatever that gap might have been. Now, as the inch closer and closer together, you might be thinking to yourself, okay, maybe another 50 basis point reduction from having the same rate with having less cost to myself if I have to break my mortgage. Because if you go and break your mortgage or incur a mortgage penalty, it's going to cost you a lot more to break a fixed mortgage than it's going to cost you to break a variable mortgage. Keep that in mind. If you are going to buy, let's say, a condo as a first-time home buyer, and you think maybe you're only going to be there 3 years, and you get a 5-year mortgage, if you break it on the 3rd year, you got a 2-year mortgage penalty that you're going to have to pay. Maybe check with the bank. What does that penalty look like for you ahead of time so you know, versus what does it look like on the variable side of things, where it's generally just 3 months interest that penalty is. Ultimately, what do the rate cuts that we're getting today and going forward mean for the market? Well, we definitely have seen a little bit of a, I won't say massive increase, but we've seen an increase in the inventory hitting the market, and we've seen an increase in buyers actually willing to get off the fence, which is huge because a lot of buyers have been sitting out there saying, well, rates are going to come down. Maybe I'll just continue to wait to see if my opportunity gets better over time here. But now, variable and fixed are getting very close. And I think come spring, they're going to be almost identical in terms of the rate. Variable may, surpass that in terms of being a little bit more chosen by the potential buyers that are out there. And that's going to spike the market finally when variable and fixed get back to that even playing field. I think winter generally is always slow, or at least that's been my experience for the last 10 years in the industry. But sometimes another rate reduction can really just spike the market. For me, I've got buyers out there who are looking right now in December because the opportunity is massive. They want to buy before everybody gets off the fence. They don't want to be the last one sitting there saying, oh, I can't believe I'm stuck in a competitive market again. And right now, if somebody has their home on the market, you can negotiate with them. The sellers are not very interested in having their property on the market in the cold winter months. It's just a pain, to be honest with you. But hey, it's a good opportunity if you're a buyer. And if you're a seller, there's still opportunity. We've talked about it in some of our other videos as well. There are markets that are just really begging to have some detached inventory because detached have been selling so well. So keep that in mind. That is still a good opportunity for you. You can always reach out to figure out if your home is in a desirable market that's moving hot right now, or if maybe you might want to put it off until Jan or Feb of next year. This is awesome. Bank of Canada lowered rates again. Does it mean that people are going to just run out there and buy houses today? I don't think so. But this, coupled with the new mortgage rules that have actually just started to be rolling out middle of December and beginning of January, I think it's a good combination of activating our market. If you want more information on those mortgage changes, I have a video. It's in one of these top 2 corners here that you can always go and check that out as well to give you more information on what those mortgage changes are. And just to give you a little bit of a sneak peek, you don't need as much for your down payment now if you're spending north of $1 million. I hope this video was helpful for you, just giving you a little bit of brief update on what the Bank of Canada has done here. If you want to chat further, you know where my number is. It's on screen in the bottom corner here, and I'll talk to you in the next video. Bye for now.